What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our FANGMAN stocks. That, of course, stands for Facebook, Apple, Netflix, Google, Microsoft, Amazon, and Nvidia. On the left-hand side, as always, we've got the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First one up on the chopping block is going to be Facebook, and what do we see on the daily time frame? Certainly a break from the outside container bar that we were discussing in yesterday's video, but it appears to be just a little bit of a fake break with that daily upper wick. Now, it doesn't strike me as being the end of the world here, noting that we did make a higher high and a higher low, and we've closed at the highs kind of right at that breakout point as well, instead of firmly at the lows of the day's session, which to me would be obviously a much more bearish implication, indicating that that would have seemed to be more of a fake break. So because that's not the case, I would start thinking about in Facebook this to either continue to build out as a bull flag on the daily, and then as we crack that 217, we get into this range overhead all the way up to roughly 235. That's definitely a bullish range to be trading for, and it would also be about the measured move from this bull flag if it ends up panning out as that pattern. So that's the upside here. Obviously, we want to see it remain in this consolidation zone, basically in the container bar low, which is roughly 206.50, we'll call it for round number's sake. As long as we're doing something like that, again, I do think we're building a case for the bull flag on the daily here. If it does crack underneath, we know that really the level that must hold is the 199, but we do have 203.50 coming from the low end of balance here as well. I would really focus on this one and not so much the 203.50, just noting that if we take a look at the 30-minute time frame, notice how this was a pullback low. Obviously, we recapture it, and that's when it's off to the races. This was just a little bit of consolidation, right? So to me, this 199 coming from the prior high really is going to mark trend instead of just being like a quick little hang-up area like the consolidation area at 203.50. So that's what I've got to the downside if we fall out of the container bar in the first place. That's the all-important level. But as I've pointed out, things do appear to be unfolding in a bullish manner. Bull flag consolidation seems to be underway and a more likely scenario as opposed to all-out breakdown. So that's what the daily would tell us. What does the 30-minute tell us? You can certainly see we have a big bull move and then consolidation into the afternoon. Let's quickly take a look from the Fibonacci perspective from the lows up to the highs. You'll notice that we perfectly held the 38.2. So even on the smaller time frame, the 30-minute, this is building out a bull flag consolidation zone. As long as we're above roughly 216, then again, bull flag breakouts here start the breakout as well on our daily time frame, right? So that's kind of how you can use multiple time frame analysis to determine when things may start to kick into gear. So if we hold this, it's kind of like we're off to the races from the smaller time frame, kicking off a larger move here on the daily. So Facebook looking good. If it does crack this 38.2, if we fall underneath 216, the first area I would look for would be right here around 212.50, coming from the double bottom neckline right there. And if that breaks, then it's just the bottom end of the container bar, as we discussed, 206, 206.50-ish area. So that's your more micro time frame trade setups to be watching out for. Next up, we're going to take a look at AAPL for none other than Apple. This move is an absolute monster move. I mean, my goodness, this thing is up now 1, 2, 3, 4, 5, 6 consecutive days in a row. Solid big green bodies. It's not like we have tiny little bodied candles doing things like this on the way up. Nope, they're large, they're authoritative, and they're happening on some decent volume, although it is tapering off. Is the move starting to come to a little bit of an end? Like, is it starting to get a little bit overbought? I mean, to me, it's been feeling that way for quite some time. If you've been watching the channels, mainly the main channel, we talked about in this weekend's update the fact that the upside reward didn't really seem worth it, given that there's possibility for downside pullback risk. And obviously I was wrong, but I don't have to catch every single trade out there. I'm still not comfortable chasing Apple up here at the highs. I want to see some sort of pullback. That way I know there's been a chance for some cool off. We can look for hammers to form and then start the next leg higher after a higher low, right? At this point in time, it's almost, I don't want to say guarantee, because nothing's ever guaranteed in the marketplace, but it's highly likely that we do put in some sort of higher low from all the way down here at 152. I mean, ideally it wants to happen here now at 162.50 for some sort of, something that looks like this on the daily, correct? But again, I don't want to say guarantee, but highly likely that we do put in some sort of higher low at some point in time here. Again, I just don't feel comfortable chasing it to the upside. Where's your reward? Your next resistance is literally right overhead, whereas the pullback could happen like this, right? So I'm not seeing it from a risk reward perspective when your ratios don't align. Again, to me, I'd rather just sit on the sidelines, and that's fine if I don't catch the momentum. There's always other opportunities out there. So on the 30-minute time frame, again, everything is running contrary to my own personal belief that you shouldn't be chasing it here, because you can clearly see we have nearly a picture-perfect bull flag happening into the afternoon. If we come in with the fibs from the low up to the highs, I mean, we never made it anywhere to the 38.2. This is literally something that belongs in a textbook, right? I mean, the flag here is nearly perfect, right? So maybe it breaks out. Maybe there is some sort of continuation, but will I be trading it bullishly? I mean, maybe a quick scalp off the open, like on a 2 or 5 minute pattern, but really I would not want to hold Apple any longer than just a couple of minutes to take advantage of a momentum trade. I don't really see the reason to be doing that from the daily perspective as we've thoroughly walked through so far. If we break the lows of the flag, which is roughly 168, we'll call it for round number's sake, just be mindful of this area right here, the double bottom lows, not really double bottom, but the pullback lows here from earlier this week and Friday, which is roughly at 163.25, just above this area 162.50 that we also talked about that could provide a daily higher low as well. That's Apple. Next up, we have NFLX for Netflix. What's going on in the streaming services here? You can see a better consolidation, right? Something like this as opposed to just screaming higher. This is a setup that I'm much more willing to trade, especially based on the implications of the daily time frame, right? If we take a look here and dissect the psychology, what do we have? We had a 2-day balance. We cracked the lows. There was a failed move from the sellers to drive it lower back to this pivot high in here. Instead, we work back into the range, look below and fail, right, on the smaller time frames. We rotate all the way to the top end of the range, and we even go further, indicating that the bulls do have momentum here. So based on the failure of the sellers and the momentum from the bulls, I would be looking for upside follow through now that we have an outside bar from the 2-day balance area. So looking for upside follow through here inside of Netflix. Our daily targets at 397, we'll call it for round number's sake. If it falls back down into range, so underneath the 2-day highs here, which is roughly 381.50, then just look for more ping pong. I would watch for something like that. But as of right now, the current situation on the daily looking fairly bullish in my estimation with this outside bar that's printed. The only concern is that volume is slightly lower, and obviously we've been up fairly significantly over the past couple of days. So be mindful of the pullback, but the setup is looking much better than, say, something like Apple so far. Let's continue and take a look at the 30-minute time frame. And again, you can see that this is literally something that belongs in a textbook. Here's the balance area, right? There's your look below and fail all the way up to the top end of the balance, and now we're consolidating, getting price acceptance above that 2-day balance. We're forming a picture-perfect bull flag. If we take out the fibs from the low all the way up to the high, again, never making it anywhere close to your 38.2, very bullish consolidation here inside of Netflix. Look for breakouts up and over this area to continue us on our upward trajectory on the daily into that target we discussed at 397. That's Netflix in a nutshell. Next up, we have GOOGL for Google. What's happening in Goog? If we take a look here, big follow through day to the upside. We talked about this yesterday, actually, the fact that the sellers didn't really look that strong on that pullback from Google yesterday. Again, we talked about this being a target. Did that even offer any resistance on the 30? Absolutely not. We just blasted right up through it. So the market is proving me wrong in the sense that there's much more momentum in this market to the upside than I had originally assumed, but I still don't think, in Apple and this Google here especially, I still don't think it's time to chase it just because the pullback risk, again, it just seems higher than the upside reward. Again, you're flying in the face of a nearly picture-perfect bull flag, but do you need to take every single pattern that exists out there in the marketplace? No, right? Keep in mind the context of the daily time frame. If this does pull back, I of course want to see it hold this level 27.25 coming from. If you think about this as a giant double bottom, right? That's the neckline. Of course, we do want to remain above that at this point in time. So pullbacks, want to hold 27.25. If we get the break of this 30-minute bull flag, look overhead on the daily at 28.50 roughly for your next area of resistance coming from this little lower high right there. After that, there's really thin structure off to the left. So, I mean, who knows? Maybe Google can continue on its merry way, but I don't feel like chasing it here is the best, idea as of right now. If this does break down, the breakdown is going to stem from a loss of 27.90 level right here, the low end of the bull flag consolidation. And again, in that case, look for your pullback to here 27.25. Next up after Google is M for MSFT, Microsoft. What's happening in Microsoft? What do we have here? So follow through a little bit more similar to what we just saw in Google in terms of yesterday's bar as well as today's. I do like the fact that yesterday's bar was completely inside the Monday bar. Again, to me, that strikes me as more of a consolidation effort as opposed to stretching that rubber band out to the upside. So we did get some solid follow through today. Again, nice bull flag consolidation here. The fact that we're now above that 300 pivot and really resolved it strongly off the open has me feeling more confident that now consolidation should remain above 300, noting that that was a strong daily pivot right here. So anything that looks like this on the 30-minute time frame strikes me as acceptable, and then we can look for follow through to the upside the next level at 311 that we've been discussing over the past couple of videos for the next upside target. If we lose 300, I would start looking out for this right here around 295. This level is not going to do us a whole lot of good anymore. Let's remove that. And you can clearly see, again, There's your 295. It's the high, it's the low, it's the low, and then we run from there. So if we lose 300, 295 is the first target. Could it look something like this? Yeah, absolutely, right? So if this puts in a short-term double top, again, loss of the consolidation lows, maybe that's your reason to get short into 295. But just remember, don't overstay your welcome. Although I haven't been enthusiastically bullish about many of these charts, don't forget that the daily trend is still screaming to the upside. Just because I'm not overly bullish does not mean that we're going to start stabbing short at these things just looking for the pullback, right? Just because we believe the market needs to come down. I don't want you to misconstrue my lack of bullish enthusiasm for, oh, this has to be a short opportunity, because that is certainly not the case. You're trying to catch like a micro pullback on like, an intraday setup. That's fine, but don't overstay your welcome. This isn't something that I would hold for like 3 weeks looking for this pullback to unfold. So I want to be clear about that as well. So that's Microsoft in a nutshell. Your levels, once again, consolidation lows, which are roughly 302, 303, and then 300, the major pivot that you want to see hold. If that fails, again, that's where you can achieve 295 to the downside. Next up, we have AMZN for Amazon, skipping along in the acronym a little bit too fast. This one, again, to me, not in chase zone. Look at how nicely it is up off the lows, coming into the 200 SMA, into that target we had at 33.35. I mean, the pullback risk here, again, seems highly likely instead of just breaking this and moving to the next target, 3,500. So something that does this inside of Amazon strikes me as bullish. Again, we're all about 31.76 inside of Amazon at this point in time, noting that we've now firmly closed multiple daily bars inside of the weekly range. Just to remind you of what that looked like, here it is on the weekly time frame. There's that level, right? We want the other tool. Let's try that again. There we go, 31.76. We're now firmly above that level. We're at the weekly 50 SMA, the midpoint of this range, right? So now we want to see consolidation here and then a break or something that does this to start to have tradable setups, not just chasing this to the upside. Again, could this continue higher? Absolutely. But where are you going to place your stop loss? Where are you going to place your stop loss? If you don't have a logical place to put it, then it doesn't make sense to get into the trade because the risk reward profile is just simply not there. So I know I'm fairly passionate about that on today's video. Maybe it's because I've missed some of these moves and I feel like I'm getting left in the dust, but you know what? That's fine. That's fine. You're not going to catch them all in the marketplace. Anyways, what do we have on the 30-minute? Sure, bull flag, right? So if we take out the Fibonacci's, there you go, holding the 38.2. Consolidation above 32.90, bullish, looking for breakouts after that. If it fails, obviously that's the instance where you would start looking for that 31.76. So that's what we've got in Amazon, and let's round it out here with N for NVDA. What do we have in Nvidia? Let's go down to a daily, of course. Take a look here on the daily time frame. This is a much more tradable setup in my estimation, right? We were talking about Nvidia. Obviously, it was up the most last week into Friday. Now it's getting that cool-off period, 2-day balance with 2 indecision dojis. I mean, to me, this is obviously a 2-day balance setup. So it's either long up and over the highs or short down and out under the lows. And because it's cooled off for 2 days, I would be much more willing to trade this to the upside instead of chasing something like your Apple or your Amazon that we were just looking at, and where I was feeling like, hey, take it easy in kind of some of these names. Don't be overly aggressive at the highs, chasing it to the upside. So Nvidia looking much better for a tradable setup here. So let's put these levels on the chart. Let's, of course, grab the other tool to do that. Here we go. So there's your highs around 272. This 266 has clearly been recaptured. We don't want to duplicate. We want to remove. So let's get rid of that. And then, of course, your lows here around 258, 259, we'll call it just for round number's sake, was also from Friday, the little pullback right around in there, right? So to me, this is fantastic. As long as we're inside of this range, bullish, looking for breakouts, right? Up and over 272 gets us to 287. If we crack the lows around that 258, 259 level, that's breaking, and we have thin structure here, should easily travel back down towards 244, 245 through the thin structure, right? So Nvidia, is in a much more playable stage right now as opposed to everything else that we've seen, or maybe not everything, but most things that we've seen so far in today's video, noting that here's your balance. Look below and fail. There's a possible setup back to the top end of the range. Look below and go. There you go. There's your setup here. Breakout simply to the upside. There you go. We know we have daily targets up here. You also have the look above and fail, right? It happens in every single direction. There's multiple setups that can come from a beautiful 2-day balance, especially how it's coinciding with the Friday bar from last week. So that's going to wrap up our FANGMAN companies. If you enjoyed the analysis today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.